What if financial crashes aren't accidents? What if they aren't failures of the system, but the system working exactly as designed? Every time a crash happens, you're told the same story. Greed, mistakes, bad management, unexpected events. But here's the real mystery. Why does the same group always get richer, while everyone else gets poorer? Today, we expose the hidden architecture behind financial crashes, the blueprint that quietly transfers your wealth upward, over and over again. By the end of this video, you'll see every crisis differently. To understand this system, we have to go back to a truth most people never learn. Modern money is not backed by gold, silver, or real assets. It's backed by debt. Banks don't lend existing money. They create it from nothing when you take a loan. This is called fractional reserve banking. This system only survives through cycles of expansion and collapse. And those cycles aren't random. They follow a predictable architecture. Central bankers and financial elites built a system so complex that collapse became a feature, not a flaw. But how did it begin? The foundation was laid in the early 1900s with the creation of central banks like the Federal Reserve. Before that, bad banks died. Good ones survived. Now, reckless banks weren't punished. They were rescued. Take huge risks during booms. Socialize losses during crashes. Privatize profits forever. This was the birth of the crash transfer system. Banks learned to create money, lend aggressively, and inflate asset prices. Easy mortgages, student loans, credit cards, mass government debt. Asset bubbles became the engine. Stocks rose. Housing exploded. Everyone felt rich, but the system weakened underneath. Step by step, inflate assets, pool in regular investors, increase hidden leverage. Wait. When it breaks, the transfer begins. Crashes begin in silence. Liquidity dries. Trust disappears. Institutions panic, then headlines. People sell in fear. They lose homes. They dump stocks. But insiders buy. At discounts. With fresh money. With government guarantees. Wealth doesn't disappear. It moves. After every crash, unemployment rises. Small businesses vanish. Workers struggle. Meanwhile, banks are rescued. Corporations recover. Insiders expand power. These aren't failures. They are resets. Politicians promise reform, but the architecture stays. More debt. Bigger bubbles. Bigger collapses. And today, we are inside the next cycle. Debt levels are historic. Printing money never stopped. Asset prices rise without logic. The same pattern. Easy money. Bubble growth. Hidden stress. And when pressure breaks, the transfer activates again. The truth. Crashes are liquidity events for the powerful. They are designed to move assets, centralize ownership, lower labor value. This isn't chaos. It's choreography. 3 truths. Crashes are features, not failures. Wealth is transferred, not destroyed. Credit controllers control collapse. The real question, now that you see the architecture, will you ignore it or prepare for the next transfer? Like the video, subscribe to the channel, and comment. I see the architecture. Because once you see it, you can't unsee it.